In this video, I'm going to show you step by step how to trade using liquidity zones. The exact same method I use to trade the markets and scalp the markets precisely. But just to keep it real, I spent over 5 years learning strategy from strategy and figuring out what strategy actually works. And after testing everything out, I come to realize that most of these strategies online aren't even relevant anymore. So in this video, I'm going to get straight to it. And by the end of this video, you're going to learn how to identify liquidity zones before price moves, where to enter and exit trades with precise entries, how to avoid what we call stop hunts and fake breakouts, and most importantly, how to apply this same strategy for your small account, whether if it's $100, $1,000, or $500. You will know everything that you need to know. So first, let me show you a real live example that I took live trading with this same method, trading gold, on my $100 account. All right, so it's literally 1:30 a.m. in the morning. I'm about to go to sleep, but I told myself I'm gonna show you guys a cool ass setup I'm gonna take, and then I'm gonna wake up tomorrow, see where we at. But I'm gonna actually buy this trade just because it is a solid trade based off of my style that you guys are going to see that I like to take. And I'm actually going to ride it to this liquidity zone here, this potential PNH level here, potential new high. And we're going to actually buy this on my prop firm account, and we're going to do one standard and making sure I am in the right trade. Hold on. Now we're gonna go ahead and buy that, and then I'm also gonna take a buy on my actual personal account with Hanko X, so you guys can see that as well. This is actually my first time taking a gold trade with Hanko X on this account. I mean, I only took 2 trades, but you know, it is what it is. So we're just gonna do a small position here because I don't want to over leverage this account. So I'm gonna go ahead and place a buy for gold. We got in our buy, we're locked and loaded. We're going to go ahead and go to this. Let me go ahead and figure out this take profit mark. All right, cool. We're gonna add our TP. Gonna do it right about there. Boom, we set. Show you guys where we at right now, 157 with this account. Show you the 2 trades we took. Nothing crazy, but you know, the account's got to grow eventually, and it will. And we're also tapped in on this trade here. So I'm gonna show you guys the stats tomorrow, let you know win or fail. Regardless, you guys will see it. I'm back, and it's 2:40 a.m. I was about to go to sleep, but yo, this is crazy. So right now, you guys see where the price is at. I'm actually about to pull up my Hanko X account, show you the current profit, and we're at 70 fucking, wow, that is crazy. So we're gonna close out all positions and go from there. I was told trading gold, the best time to trade gold is during this time, London session. So this is really cool to see. You guys see this live in action. You guys literally just see me took profit on my $100 account and on my funded account with the board. So there's a lot of cool stuff going on. You guys see that I only got in a very small lot size, and don't get no better than this. What are liquidity zones? It is a major institutional order flow of price that is accumulating, known as a magnet zone, where a lot of the retail buyers like us are putting buy positions, sell positions, market executions, all in this same area. And the reason being is because we are accustomed to retail analytics, meaning support, resistance, major key levels, major high, major low, swing high, and so forth. However, big banks, big institutionals know this, and even though this is something we cannot see, they can see something called order flows. And order flows in their eyes looks like a bunch of color blocks, where the lighter it is, the less money. The more it is, the more money. And they use that in their advantage. And that is exactly what a liquidity zone is. But if we take this in an aspect as a scalper, we can use this to identify stop hunts, identify false breakouts, and get high probability trades for setups to catch faster scalping plays. And this is exactly what you guys just seen happen with the gold. I like to use this aspect also to kind of know where my stop loss should be, essentially, because if I put maybe a very tight stop loss and I'm like up in the air because I see that we could potentially drop, I'm already confident enough to know that this was my grab and that was it. And me having my stop loss literally right here and my entry right here, but my take profit would probably be like a 1 or 3 up here, I'm completely fine. And that is what makes scalping so beneficial when it comes to liquidity zones. Now, a couple of things you have to make sure you are familiarizing yourself is that liquidity is invincible on a standard retail chart. Just like I mentioned, this is hidden, and this is something known as an order flow that smart money engineers like to see and like to hunt us down. So us being where we're at in our position as a retail trader, we need to make sure that we're also thinking like smart money concept traders or smart money engineers, known as the institutionals, the banks, and the big dogs, the ones that have billions and millions of dollars to trade consistently. When it comes to identifying this, I want you guys to keep in mind, not all the time you will see a liquidity grab. It will sometimes fool you once and then shame on you, fool you twice, put the blame on you. It will usually fool you 3 times before it even fool you the 4th time. The key to liquidity zones is waiting first for it to actually sweep the liquidity before you just say, oh, this could be a potential liquidity zone, sweep, grab, or such and such. So some of the side notes that I like to look for liquidity is identify these liquidity zone levels basically to use for my PNL and PNH strategy, which I have a video. If you guys haven't seen that, check that video down below. That's basically what I like to call PNL and PNH, which I use my fibs to kind of give me that idea of where the liquidity zone could be. Now, going into a little bit more about liquidity zones versus regular support and regular resistance. Retail traders think this all the time. Well, I'm going to trade support, I'm going to trade resistance. Resistance and support is basically a solid wall where price won't break. Where price breaks support and resistance, it's a sign of continuation. So a lot of times we are taught that when we break the structure and we pull back, we act as resistance and then it goes up. Guess what? This is so accurate and this is actually true. Guess what? The problem is sometimes this happens and sometimes it doesn't happen, where it will go up, but then it will come like this, go up again, and then it will go that way. This happens too. It's all about how you want to see the market. This is why I always say focus on one strategy and focus only on that. Because if you think about too many strategies and too many concepts that you study, you're just going to put yourself in this pool of everything. I know everything, but I don't know enough to actually take a trade. That doesn't really matter to us. So we're not even going to pay attention to support and resistance like that as far as breakout retest. We're only going to look at this as exactly how it says. It is a solid wall, price won't break. We're smarter than that. We're going to use support and resistance as not a wall, but we're going to actually use it as a trap for retail traders. And we're going to think vice versa. Price breaks support and resistance to trigger stop orders, then reverse. Therefore, I have this strategy that I talk about in my TWS community, where basically we grow small accounts as it challenges and we go live exclusively. So if you guys are ever interested, that link is down below. A break of structure or a break of resistance or support. But instead of it looking at it like that, we see this as a grab of liquidity because we also have something called equal lows. When we see prices equal high and equal low, guess what? Every line that you see that is red or green acts as money. So think of each line is worth $1 million. As a bank and institutional, you see this. Why would you not take the $2 million? So guess what? As a smart money trader, they will take it by grabbing the liquidity to about going a couple pips up above that support and resistance that you guys see. And then guess what? It also knows there's another additional $1 million down here. So it will then sweep that out. And a lot of you guys will be, well, this is a liquidity sweep, so now I can see that this is also going to go down. That is 100% accurate. Sometimes it will continue down or sometimes it will continue up. But regardless, all I'm getting at here is that use your support and resistance as a magnet of sellers that is accumulating all of the orders or pending orders, ready to buy it or sell it because they see this as support and resistance. Common mistake you do not want to make. So example, fake breakout equals liquidity grab equals reversal, which identifies as a beautiful scalping entry, which you guys will see more when I show you guys that. I want to get into my favorite part, how smart money use liquidity zones. So I want you guys to think of a pool of money, and we're going to take this even more further. We're going to think of this dollar signs as shrimp. Let's say Dick and Tom were coming together to figure out a way to make more shrimp or to fetch more shrimp because they're hungry and they want to feast. for their entire family, for Dick's family and for Tom's family. But in order to make that possible, they need to create some type of delusion to get the shrimp in tune in this pool. Well, a couple ways is Dick and Tom came up with an idea of creating the baseline, which is the pool, and then inside of that pool, all they did was manipulated something that shrimp loves, algas. So we're just going to say there's a bunch of algas because shrimp loves basically fresh food, anything green. They're just putting a bunch of algas inside this area, and when they do that, little do the shrimp know that they're getting trapped instantly that the moment they walk into this zone. So there's like this open hole for them to swim right into, and as they do, it accumulates, and it accumulates. And Dick and Tom is literally sitting a couple feet away without them noticing that this is happening. So then now, the moment that Dick and Tom sees there is enough shrimp for them to feast and take it to their family, they are now happy, and they're going to now come over to the actual pool that they create, and then from there they're going to essentially take it and eat it all up. And guess what? Dick and Tom is so smart, and they do this all the time because they are the big dogs and they're the sharks. They're going to do this exact same thing in another part of the ocean. That is exactly what a liquidity pool is. So when you guys see anything where smart money or support and resistance or major high, major lows, essentially think of Dick and Tom. Now, how does this create scalping opportunities for us? Basically, we take the liquidity grab as a quick reversal, and then we get our selling opportunity. Remember, Dick and Tom is coming in here and sweeping up all of the shrimp to put them into their bowl to take back home to Dick and Tom's family. And in the eyes in the market, what is happening is Dick and Tom is sweeping out all of the liquidity, all of the shrimp, which they did right here, and now they took it and now they're ready to eat. So they're rushing back home, and that is where your selling opportunity, which is right here, is now to happen. This is the setup that you guys always want to look for in the market. Now, there is a vice versa psychological thing that you can do as well, but is more advanced, but I will show you guys that towards the end of the video. How to identify liquidity zones on a chart. Very simple. Where to look: equal highs and equal lows, smart money targets, obvious price levels. It is the exact same concept that I just mentioned above. Another thing you want to also look for is big wicks, fake breakouts. Price wicks into a liquidity zone, instantly reverse. Volume clusters. This is something that you guys have to pay attention to when it comes to the candle. Large order observes liquidity before big move. Listen to that. Large orders observe liquidity before big moves happen. So this is exactly what happens when you see large orders is being accumulated and then the big move is about to happen. Now, best reason why this applies in scalping is because liquidity is taken. Once liquidity is taken, the reversal confirmation is there, and then the instant execution is instantaneously right there for you guys to take. So now that you understand how that applies and how you can actually utilize that and how to look for that in the actual market, let me show you step by step how to actually scalp liquidity, which is the most important part. Step 1, find high probability liquidity zones. Identify major equal highs, lows, wicks, clusters, or fake breakouts. Step 2, wait for the liquidity grab. Don't enter immediately. Wait for the stop point, which is once again that big wick, that large wick, buy, sell, stop, wick outs. Wait for that first, and then step 3, enter on the reversal confirmation. Price must first snap back to structure. After that, enter on the retest of liquidity zones for a higher accurate entry. And then step 4, set your stop loss and scalp to the next liquidity zone. Remember, Dick and Tom is doing this all day because they know that they're the big dogs. They know that they have the control and they understand how everybody moves. So that is exactly what we're going to do. So going into the market, you see that we have our grab right here. We seen that market took out all of the liquidity here, and that wick out was the best confirmation we needed. Remember, just because you got the wick out, don't enter yet unless you really want to get your money taken. Wait until market snaps back into structure by creating what we call a retest, which exactly happened right here. Price created a retest. It failed to break through once again. How is that possible? Because we got our very favorite confirmation that we talk about a lot in TWS and also on my YouTube channel, which is this engulfing candle. Once we get this engulfing candle, that is a clear indication that we are now in to sell this position, and then we can take our entries here. Now that is completely opposite of what I just basically took on gold. Why is that? Well, because like I said earlier, if you get more events into this after watching this video multiple times and sharing it and commenting down below like you want more, you will understand that you can use liquidity zones as a tool for take profits if you use other confirmations that we apply, which once again, like my PNL strategy and PNH strategy or wave theory strategy. But if you guys pay close attention, when I took this trade, I seen we had liquidity on a 1 hour because we had wicks. Regardless if they're 1 wick, 2 wicks, or 3 wicks, they are wicks. These are orders. We're in a higher scale. We're in a higher time frame. So on a 5 minute, on a 1 minute, this looks like a bunch of accumulating orders that these shrimp or these retail traders, let's say, are basically buying and selling and putting a lot of limit orders. I use that in my advantage because instead of using my very common strategy, which is my fib strategy that I use to find my PNL levels, I actually use the liquidity to figure out my take profits, because essentially when market comes into this level, I am expecting it to do a liquidity grab and then hopefully go back that way. Sometimes it might not even do that. Sometimes it will do a liquidity grab, come back down, and then still come up, but act now as supply or demand or support and resistance in this instance. But regardless, I took all of it out of my mind and I just thought of it as one direction, and that direction is just take profit. So this is why this strategy worked out, and this is why this strategy also made me $78.45 trading it through Hanko Trade as the broker I use to take my small account gross and all of that stuff, just because they're really good with the spreads. Applying these methods and applying these concepts really can work out for you. Now imagine being able to trade this strategy alongside with me step by step, not just watching these breakdowns, but actually getting real-time data, entries, exits alongside with me while trading live. That's exactly what we do in TWS Trade with Solo. That is my private community where we're running our $100 challenge, taking it from $100 to scaling it to XYZ all together in our community. Not only that, you'll know exactly how to find perfect executions, the right executions, and how to consistently be getting payouts and consistently growing your small account, whether if we're going live or not. So instead of seeing me break down it on YouTube, you're actually going to get real-time analytics from me in the Solo community, Trade with Solo, all through TWS. All of that link is down there in the description. Additional to that, you do get access to our Lock and Trade AI Coach Assistant, which will help you find better setups, better entries, and help you perfect your problems that you have in the market. So if you're interested, once again, check that link out down below. Your boy Solo, I appreciate y'all. I'm checking out. I'll see you guys in my next video. Peace.